On September 10th, 2023, in Bitcoin block 807057, crypto firm Paxos made a costly error. A transaction fee, not for a few dollars, not even for a few thousand, but 19.8 Bitcoin, worth over $500,000 at the time. The block was mined by F2 Pool, one of Bitcoin's largest mining pools. And what happened next seemed generous. F2 Pool returned the 19.8 Bitcoin to Paxos. But here's the thing. The miners who spent their energy finding the solution to the block, they didn't even know it happened. They didn't get a say or a vote. Because today, in Bitcoin mining, the people doing the work aren't the ones making the important decisions. So how did miners lose control of Bitcoin? And what does it mean for Bitcoin's future? Let's rewind. In Bitcoin's early days, miners weren't just hashing. They ran nodes, built blocks, chose transactions, and collectively forged Bitcoin's history. Today, things are different. Most mining machines don't select transactions. They don't even build their own blocks. An ASIC can only do one thing, hash. Everything else, building blocks, selecting transactions, upgrading the network, happens somewhere else. So if miners aren't performing these roles anymore, then who actually controls Bitcoin?
Over 99.9% of blocks added to Bitcoin's blockchain aren't built by independent miners. They're mostly constructed by just a dozen pools. And whoever builds those blocks writes Bitcoin's story. In late 2023, F2 Pool quietly filtered transactions linked to US sanctioned addresses. No miner voted. No node rejected it. It just happened, invisibly and silently. Blockseer took it further, launching an OFAC-compliant pool where only approved transactions were allowed. Instead of a global mempool, in practice we now have a handful of super mempools, private islands of block construction, governed by whoever owns the servers. If you can't get into a mempool, if your transaction needs permission to exist, Bitcoin stops being open. It becomes gated and permissioned, just like the system it was designed to replace. And the weirdest part? All of this was made possible by a hidden flaw in how miners and pools talk to each other. Let's zoom out for a second. Miners chose to join pools because they offered predictability, steady payouts, less risk. But to make it work at scale, Bitcoin needed better communication between miners and pools. Early on, miners used a clunky system called Get Work. They had to flood the network with endless work requests, choking bandwidth and wasting energy. And when pooled mining exploded, Get Work broke down. Stratum v1 was the fix. It created a persistent, always open connection. Jobs could be pushed out instantly. Efficiency soared. It was a massive leap forward. Without it, Bitcoin mining couldn't have industrialized. And today, nearly every miner still uses Stratum v1. But hidden inside it was a dangerous trade-off that few understood. Here's how it works. 1. Miners subscribe to the pool. 2. Authorize themselves, sending credentials in plain text. 3. Receive a job with no knowledge of what transactions they're securing. 4. Submit solutions, still blind to the bigger picture. It's more efficient, but opaque, insecure, and disempowering for miners. You can think of it similarly to the Industrial Revolution. Imagine you were once a skilled artisan, building your products from start to finish. Now you're just tightening bolts on a machine you don't fully understand. Trusting the orders shouted down the telephone line. Trusting that customers are being sold a good product. Trusting the boss to split the profits fairly. And because the line between you and your boss is insecure, attackers can hijack your work without you even knowing. Even when everything works, you can't verify whether you're being paid honestly or censored silently. Stratum v1 didn't just make mining more efficient. It blinded the miners and quietly handed control of Bitcoin's future to a dozen corporations. But it doesn't have to stay this way. There's a new blueprint for miners, and it could change everything. Imagine an industrial revolution, but this time, the workers aren't just blind cogs in the machine. They pick the projects. They draw the blueprints. They build the products from start to finish. And they earn profits directly from the value they create, without any factory boss standing between them and their rewards. That's the promise of Stratum v2. It's a complete redesign of the protocol, improving security, efficiency, and miner sovereignty. Here are the key differences. Encrypted communications. Your connection is locked and secured. No more hijacked hash power. Block template control. Miners build their own blocks and choose the transactions, not the pool. Direct payouts. Rewards are paid straight from Bitcoin, with no middlemen. Smarter connections. Miners bundle communications to save on bandwidth and boost profits. Stratum v2 doesn't just fix inefficiencies, it restores real competition for control of the most valuable real estate in cyberspace. But right now, there are barriers. Many mining machines are locked to old software, making it hard for miners to upgrade by themselves. Pools have little incentive to give up control. They profit from deciding what goes into each block. And miners, too often, go for the path of least resistance, trading sovereignty for convenience. Ultimately, miners have a decision to make, and the future of Bitcoin depends on how they answer. Today, we're standing at a crossroads. On one path, a Bitcoin controlled by a handful of mining pools, block space rationed by private mempools, censorship quietly enforced, a network that looks decentralized but operates on permission in practice. On the other path, a Bitcoin defended by miners who build their own blocks, who choose the transactions, who earn directly from their work without trusting a middleman. At the end of the day, Bitcoin's story will be written block by block. It's just a question of who the authors will be.
For more information, visit simplemining.io.